Now, the power of compounding is said to be the eighth wonder of the world. You know, Einstein, he used to say that I can understand every damn equation in the world, E equals to mc square, but I am baffled by the power of compounding. The graph goes exponentially in power of compounding. Let me just show you a sample how money can get multiplied even if you are growing at 30% per annum. I have recommended lot of stocks in the group, WhatsApp group. Very easily these stocks have risen beyond 30% per annum. If you discipline way, the recent portfolio has performed 220% in just 10 months. If you are without getting over ambitious, just like a soldier with discipline, if you are following the recommendations and all, you would definitely hit that 30% mark easily. And that 30%, when you keep on compounding, even a small value can become a huge value. So I'll tell you, whether it is your friends or my friends, whomever that we see, people who have created sudden wealth is all because of real estate. The mega boom in real estate only has made people richer. Especially in my community and society that I know people, no talent, no business, nothing. But all of a sudden a jackpot, some real estate boom in some particular area and the land prices have shot up like anything. But my calculation says that even best of the best real estate boom, people haven't made more than 20% per annum. But because they invested 15 years, 20 years, 30 years back, the value has become so big. That is what is the power of compounding. So imagine if you are able to hit 30% per annum, you could have made much more than what you would have made even in real estate. So I do not say that you should not invest in real estate. I would rather say that 80% of your money should be in real estate. But that 20% what you are investing, if you are investing selectively in the quality stocks, you are going to maybe, if you continue with that system, going forward you will see that the 20% value what you invested is much higher than the real estate value where you have deployed 80% of the money. Let us quickly have a look at the compounding table. This is how the wealth grows. And this is no illusion. You can verify these figures by opening the compounding calculator in Google. If you are growing your wealth at 6%, which is your fixed deposit, post tax, that's what you make. Inflation is 5%, guys. So, if you have done 1 lakh of fixed deposit in 1 year, it becomes 1 lakh 6,000. If you keep on compounding, that means you are not withdrawing. Next year, you will be getting return on 1 lakh 6,000, isn't it? Then third year, you will be getting return of 2 years interest. Like that, compoundingly, if you do it, then in 20 years, your money will only grow by 3.2 times, where inflation itself is growing by 2.65 times. What I mean to say is that 1 lakh that you invest today, after 20 years, that value will become 3.2 lakh in a bank. But the lifestyle cost will also increase by 2.65 times. That means effectively you have only earned 60,000. In 20 years you have made only 60% return if you take out the inflation part. Because what you are able to buy with 1 lakh today, you will be able to buy the same thing for 2.65 lakh after 20 years. And I am taking it very conservative, inflation. It is actually much higher. Example, school fee. Do you think the school fee which is 1 lakh today, after 20 years it will be 2.65 lakh? It will be much higher. It will be like 4-5 lakh. That means putting money in fixed deposit is just jamming your money. You are blocking your money. Then shouldn't we have fixed deposit? Yes, we should have it. That is only when you need emergency fund. In case there is sudden uncertainty and all that. But what I say is that in case you are already having insurance and everything, then maybe that situation will not arise. I personally do not hold any fixed deposit, zero fixed deposit, guys. But I am totally insured with all my family members and with good coverage. Whether medical or life insurance, both of them are covered. And that anyone should have it. But whatsoever, what Warren Buffett has made is this one, approximately 25% per annum. he has grown his wealth 70,000 times in 50 years. As you keep on giving more and more time to your investment, the value will increase exponentially. We need to target this. And this is achievable, guys, very easily achievable, I would say, because we are investing in India where the growth story is still to be unfolded. He invested in America, which is already under saturation. We are going to invest in India, which is going to become superpower. Sooner you'll see India is the third largest economy in the world. There are thousands of kilometers of roads to be built up. There are like thousands of new commercial buildings to be come up in every city. Metro station, the bullet train has not yet come, which is 20 years old technology. So we still have a long way to go. If India has to really grow, then stock market has to rise. Because all the top companies are listed there. Only when these companies grow, the India would grow, isn't it? So if you are growing at 30% per annum, your wealth would get compounded to 2,600 times in 30 years. Imagine 1 lakh invested today would become 2619 lakh crore. Sorry, 2619 into 1 lakh. That means 26 crores. 1 lakh invested today would become approximately 26 crores in 30 years. 10 lakh invested would become 261 crore. So these figures may sound really big, but the time that you are giving, the discipline that you are following, this is easily achievable. Forget this figure. Even if you had invested in mutual fund, you would have got these returns. Any mutual fund, equity mutual fund, if you have invested 20 years back, you would have multiplied your wealth by 38 times. Because the stock market is new, I do not have any record for this. But yes, going forward, in the next 20 years, people who had invested in mutual fund right at the start would be making this kind of returns. This is much higher than even the real estate. During boom time, suddenly the prices may shoot in real estate, then again it settles down. Yet you are able to make this kind of return in real estate, 20%, 15%, 16% is the average return for real estate. Gold, average return is around 9%. So neither gold is good for long-term investment and neither your fixed deposit is good for long-term investment. So in case you do not have any knowledge about stock market, then mutual fund does make sense. But if you have knowledge, then I would say stock market would make much more sense than even equity. The difference may look like only 10%, but going forward, see how much of difference it makes in 30 years. Your mutual fund would multiply your money by 807 times, but selected stocks that you have would have multiplied your wealth by 2,619 times. Nearly 3 times. 3 times of wealth you would be able to create. If you are pro, if you are ace, let me tell you, this is also achievable. In the last 10 years of my trading, I have achieved beyond this. But let us be conservative and only target this one. If you are able to timely switch the business, timely switch the sectors, if you are able to get out of the market just before the recession or before the market crash, re-enter just before the market rises, this is also easily achievable. This can be just a dream kind of returns. Now coming to the real returns. No doubt our 1 lakh would become 26 crores, but the lifestyle cost would also increase. So that would increase by 4.32 times. That means the flat what you are able to get for 1 CR today would be minimum 4 CR after 30 years. Milk which is at 100 rupees a liter, pure milk would be available for 400 rupees a liter. So assuming this inflation cost, the prosperity would be 606 times. Meaning your lifestyle would improve by 600 times. The effective value would be 600 times. What you are able to buy today for 1 lakh, you will be able to buy the same thing for 4.32 lakh that time. So I need to divide this figure by 4.32. That's what I get here. As of present value, That means 1 lakh that you invest here, after 30 years you would make this money, but how would be your lifestyle? Imagine 6 crore today. How would be your lifestyle? That is how your lifestyle would be when you're having this much money after 30 years, assuming let's say 2050. You have to think long term. I know a lot of people are there, especially young blood, who wants to double their money overnight. Let me caution you, with my 15 years of experience and with my dad's more than 30 years of experience, where we have given our heart and soul to the market, let me be very clear and blunt. It is not possible to make quick returns in the market. At times you may make, but at times, lot of times you will be even losing money very quickly. I've got almost every week I get at least one call stating that, sir, I lost money because of this guy, I lost money because of doing options, I lost money because of doing futures. Never ever trade in futures and options. That is entirely gambling, which is all big players' game. If at all you want to do it with hedging. But 99% people don't know hedging, forget about doing it. I only believe in hedging, I only do hedging, I only teach hedging. But options are as such that 10 rupee can become 100 rupees in a single day, 100 rupees can become zero in a single day. That is how these options trade, which I'll be showing you in the live platform as well. Only follow the stock selection, and I am holding your hand maybe till the live supports. That support will always be there. The WhatsApp group is permanent. So as and how I feel any particular stock idea is worthful, I would definitely be sharing. So it's just like in hand holding. Your job is only to press buy and sell button. That is it. Yeah, you can ask 100 questions on the company. Why did I recommend it? That will build confidence in you that you have to hold on to that company. But when I really teach you the method by which how you can choose the company by yourself, then that is even better. Then maybe you will shortlist the companies and forward it to me and say, sir, please study this company. I find it really good. That is the stage you will reach post training. In 50 years, it is an unimaginable wealth, guys. Today, whatever the wealth Ambani, Adani has got, that would be your wealth maybe after 50 years, even if you start with 1 lakh growing at 30% per annum. But isn't that an amazing income? So, compounding is the eighth wonder of the world. So, just with this power of compounding only, you'll be able to create wealth in the market. You say that in 30% I want to make in a month. Some months you'll make it, some months you'll lose 50% also. Eventually, you will not be able to settle even at 20% per annum. And that is when you are following punter's call. You look at television and you buy. See, just tell me one thing. Stock market is a zero-sum game, right? A lot of people have seen, they read the messages in the WhatsApp, especially Telegram. Remove this app as early as possible. Telegram, WhatsApp, and your television, newspaper, they are following the recommendations which are coming in public platform. If the public is buying, someone is losing, right? Do you think those big investors are losing the money? Never. Rich people become more richer, poor becomes more poorer. Only selected 10% poor people only become richer, who are totally blind eye to the news, who do their own self research and invest in the stocks in conviction for a very long time. You have to be in that category. I recommended NSL in the WhatsApp group. Let me show you that. At what price did I recommend, at what time did I recommend, and what is the price today? Not all the stocks rise like that. Among all the stocks that I recommended, this has only risen such sharply. In a cricket team, if one player hits a century, the entire team makes a score, isn't it? This is what we also want for our own portfolio. Only one or two stocks out of 10 stocks in your portfolio, if they perform, you will be able to multiply your money. I recommended altogether 7 stocks. In that, 3 stocks have minimum multiplied by 3 times. Rest of the stocks, they did not fall, but they are where there it is. Maybe 15-20% fall. I'm talking from January 2022. Hilton Metals, I recommend this. All had come in the January 2022. That means 10 months back. Hilton Metals from 28.5 had become 77. Panach from 70.6. It is where it is. NLFL has risen slightly. VSF projects little bit. Then VR, DRE Consulting 50%. This we have made a loss. NLFL also it has fallen now. It is approximately 30. This here also we have made 30% loss. But here it is 50% gain. Deep Energy Resources almost 3 times return. NSL, this has become a blockbuster for us. 27.25 rupees stock, 193 it was 1 week back. Today the price, let us see. $236.5 guys. Look at this chart. This is the rocket. So somewhere in the month of January that I recommended. So took lot of patience, right? Maybe after January till June you would have said, sir, what a waste recommendation. The stock is not even giving me the return of 10-20%. But then when the turn comes, it's like a bamboo tree, you know. Bamboo tree for 5 years do not grow anything. Then suddenly in the 6th year, it grows to 10 feet tall. In the next year, it grows another 10 feet. This is how even stocks are there. We have to be in advance before the rise. After this, we will not have the courage to buy. So we have to foresee what is going to happen in the next 6 months, what is going to happen in the next 1 year. With that vision only, you'll be able to make extraordinary income. What revenue is going to come, you should be able to forecast. This we bought it in January, but the results had come in the month of March with 57% growth. And where we are, just see. 1200%. 12 times you would have made your money from a single stock, which would have given you an average return of 200%, even if none of the other stocks had performed. The beauty is that if all other stocks have become 0, 0, 0, 0, 0, only with a single stock you would have made 2 times of your portfolio. This is the magic of investing. We want just one player in our team to hit double century. That's what we have to target. But while recommending, honestly speaking, I also did not know that NSL would rise this much. Maybe I would have thought Panach would do it. Maybe Hilton Metal would do it. But yes, all of them had that capability to hit double century. But which one we do not know. And believe me, if you hold on to these stocks, someone else will also become like NSL. And maybe NSL will go to even 300, 400. There is no stop. More time you give, more returns you get. Alright? So following the system and continuing with it, there will be bad times where maybe in a year we will not be able to make even 20% return. But there will be years where we'll be able to make double the return. Average we have to hit this 30% CAGR. That should be target. My internal target is like 50%, but I want to be very conservative. Your expectation should be low. But even at 30%, the figures are magical if you give a lot of time. A lot of people do SIP and all. Very good. At least there you have the discipline. They are not thinking to invest from 1 year perspective, 2 years perspective. Though they will not make extraordinary return, maybe they'll make only 20%, but I'm sure that they are going to follow it for so many years. The discipline for sure they are going to have it. They are going to create a lot of wealth also. Maybe potential wealth, not so much, but at least they are able to create. At least they are there with the system. But if you just follow the points that I tell you, nothing else is required in the training. Globally, every market, every instrument you'll be able to trade with the knowledge that I'm going to give you in the training. Because it's not just my 15 years of experience. When I started in the market, wonderful. First year was an amazing return. I thought that there's no other business we have to do in the world, only do stock market. But the next 2 years, it has shown me stars. Totally blown up my capital, gone into debt, came into depression, did not touch the market for 2-3 years, took a long break. But only one wise thing that I did is read books, books, books. If I've lost money, why did I lose? That question I wanted to know. Why did market crash? Because that's the first crash that I've ever seen. Before market crash because of Harshad Mehta, that was a scam. But what is this recession? The word recession I heard it for the first time in the 2008. And when the recession is there in America, why the hell are we falling? There's no problem in India. But when I read those books and all, at least I would have read some 60, 70, 80 books. I love reading them. And books are like so thick, 150, 200, 300 pages books. Security analysis. One page you read, you'll get sleep. So much theoretical, but I love reading it. With that knowledge and with lot of videos, thousands of videos I might have seen in YouTube of all big investors, not some hopeless tap guys, youngsters and all. Lot of people have seen they are investing even by watching YouTube videos. There are so many channels, Telugu Day Trader and all. Don't know how are they getting so many subscribers. And these are young chaps who have come just 3, 4, 5 years back in the market. They do not even know the market cycle. Market cycle is for 25 years. I would say even 15 years experience is not sufficient. Because you do not know how market reacted during World War I, World War II. What will happen to the market in World War III? You cannot forecast. Even a guy with 50 years experience cannot forecast. But someone who has written a book in the 18th century, someone who has written a book in the 19th century, they can tell us. That is why books is where real the treasure is. And not one book, you require to read lot of books of various investors who have given the time to the market in various times. Like Warren Buffett has seen World War I, World War II. Then Benjamin Graham has gone through the Great Depression phase. That time it was like a global recession. In 1980s I'm saying, sorry, 1880s I'm saying. So make sure that following the system with the discipline, there will be tough times, there will be good times. You have to always see it on an average. There are stocks where I recommended which did not rise. NLFL is a loss right now. VSF project is a loss. You would have lost 10% and say, sir, in 10 months I lost 10% rather than making 10%. Better I would have done fixed deposit. See, in a cricket team, if Virat Kohli doesn't play, will you throw him out? If he gets out for a duck? India has won, but Virat Kohli made a duck. Will you throw him out from not taking him into the next match? It still take him, right? Maybe 3 matches back to back also it doesn't perform, we'll still take him. Because he has got that average record. Maybe this series he did not play well, next series he'll play well. But he's still a great player. No? So sometimes maybe the first stock will perform, sometimes maybe the second stock, sometimes maybe the third stock. Overall, you have to take it as a group performance. Even Warren Buffett hasn't made income with all the stocks. In fact, 30% of the stocks what Warren Buffett has invested has given him not loss but heavy loss. And it happens with even Rakesh Jhunjhunwala. He lost huge thousands of crores in A to Z maintenance. There's a company called as A to Z maintenance. He lost huge money in Just Dive. Like that, so many stocks are there. He invested heavily in DHFL. DHFL from 500 rupees has become zero, totally zero. That guy is an ace in the stock market. He's a chartered accountant by himself, managing funds of 25,000 crore. He can also get cheated. Anil Ambani was one of the richest persons 10 years back in India. Today, very easy. When the division of the business happened, Anil Ambani got more wealth than even Mukesh Ambani. He said, okay, Bada Bhai, no problem. You have it. He was a little generous towards younger brother. But look at the fate of these brothers. So, investing and with conviction, remaining with the stocks is very, very important. The another problem what I see with the people is that wherever the stocks are rising, let's say this 27, after 3-4 months remains at 27, then slowly it starts rising, or 30, after 3 months the moment has come at 30, 35, 40, they exit. Don't have patience. That mistake should not be done. I'll tell you where the time of exit would come. The time we see, okay, things are not working well. Like we see a player, say Virender Sehwag. He has played so many hundreds of matches. But we have seen one series did not play well, second series did not play well, third series also did not play well. Time has come for him to retire. MS Dhoni has been a great player, but maybe that age factor or something. Back to back series they do not play well, then we are pretty sure, okay, now this is a particular stock where we have given him ample time, is not performing, throw it out, replace that with some other stock. Book loss, no problem. One will come out of 10 such stocks, but the other one may cover up that loss. I recommended TRIL, I still recommend this. There's a story behind it. Just by looking at the recommendation, you may not get convinced, but I'll tell you what. This is the only company in India which manufactures transformers which are above 700 kVA. First is monopoly. You may say, sir, transformer business so many companies are doing. Transformers within that 700 kVA, no other company does in India. And you know, globally, the market leader is Ukraine. All the 700 kVA plus transformers are imported from Ukraine, and Ukraine is under crisis. This company may crack a jackpot. After I recommended, the price is already risen a bit. Maybe when it falls, you can definitely load onto it and hold it at least for a year or two. I'll tell you when the time of exit would come. Hasn't risen much, but in case it falls by 1, 2, 3 rupees, keep on loading this stock. The news is pretty much reliable and fundamental. Imagine if the orders, even 10% of Ukraine orders come to this company, this will fly. And even otherwise, forget Ukraine and all that, the monopoly, any monopoly business will give you amazing compounding return. Of all the books that I read of great investor Benjamin Graham, Peter Lynch, Joel Greenblatt, Warren Buffett, and then you have got Templeton, there is one point in common among all the investors, even your Rakesh Jhunjhunwala, R.K. Damani, every big investor I've seen one point coming in common. What is that? They invest in a business which is little different. Only that is why they get extraordinary returns. Meaning they invest in a business which is monopoly. What is the meaning of monopoly? Monopoly means there is no alternative. I'll give you an example. Domino's Pizza. I'm not telling you to buy this stock, already the growth story is over, but I'm telling you what is a monopoly business. Domino's Pizza taste you don't get elsewhere. That means you might have seen even your kids and all that, even we ourselves. If we like Pizza Hut Pizza, we like only Pizza Hut Pizza. If we like Domino's Pizza, we like only Domino's Pizza. So especially Domino's. Majority of our Indians love that. We don't get this taste elsewhere. Now what is the advantage company gets? He will give the franchisee for multi-crore. Now think from company perspective. I am the owner of Domino's Pizza. Today I don't need money. People are coming with money. People are saying that, see, I'll give you 2 crore. Please set up your shop here. The other guy will say, see, I'll give you 3 crore. Please set up your shop there. This is the power of business. This is the power of monopoly. And what I'll say? Okay, you only put money, you only put the shop, give me royalty, plus give me 20% of the bill. What a business. Your investment is zero and you're getting royalty there. All because you have something different. Now what this guy does, he started with 200 rupees a pizza, made it 250, the demand is still higher, made it 300, the demand is still higher, made it 400, demand is still higher, made it 500, the demand is still increasing. This is the pricing power what they get. A 50 rupees pizza is selling for 500 rupees, yet we have no choice but we are buying it, though we know what is the raw material cost in it. Because you want taste. Likewise, premium liquor brands also like that. Northern Spirits is a liquor brand. This is among some selected companies in India. I would not say 100% monopoly, but major market share in the premium segment of 20 plus years old wine, whiskey and all that. Generally, people get it from outside. We import it. But this company has invested heavily. Its future is very bright. But don't invest now. Already the stock has risen 20 times nearly. 15, 16 times. Like that will catch some other stock. If you are invested, hold. But you haven't, don't chase the stock. Never ever chase. I love to buy the stocks which are tap falling like this. And you know, young investors, they want to buy the stocks which are going like a rocket. Because they want quick money. But you never know when the rocket will lose fuel and then get back to bottom. Then they'll lose heavily. Do not chase momentum stocks. If you have observed in the history of my recommendations, 90% of the stocks are as such that which are totally sunk, totally fallen to the ground. So we have to buy that stock because that is cheaper now. I think from fundamental perspective, I think from long term perspective. If I like any business at 30 rupees, I should like it more at 20 rupees. Example, VSF project. I recommended this stock, and unfortunately, when I recommended at 60.9, the price had fallen down to 23 rupees also. See how the price has continuously fallen. You would not have the courage to hold on to it. I recommended at 60. Okay. So do not look at this chart. Here it may look like, sir, you are also buying momentum stock. No, think from long term. The stock at one in 2011 it was available for 80 100 rupees. For me it looked very cheap at 60 rupees. I recommended it. The price did rise a bit. No, it is at the peak only. Then it continuously fell from where I recommended, but now coming back to that same price. So, but when this price fell, I loaded up the stocks like anything. In every fall, I added. Because I know the intrinsic value of this company is 200 rupees. If I like it at 60, I should like it more at 40. I should like it more at 30. That is how you need to keep on investing. I am not buying the stocks which are on fire like a rocket. So any recommendation that I give, do not have to even ask me if the price has fallen, you should average.
So how do we expect that, right? You said, right, that we know that this price will be grow to 200, right?
Yeah.
So how can we hit that 200 price? It definitely it will hit. How and based on what strategies we
We
will
will
do?
we will value the business. See, yesterday I've shown you a company called as BN Rathi Securities. This
Hmm.
company has got 120 crore cash lying in the bank. What he does with that 120 crore? So either he is not there for the fixed deposit, right? Such a big businessman, he is not here to make 6-7%. Do you think Mukesh Ambani profits he will put it in the bank for fixed deposit? No. He will use that funds for some business opportunity. This guy is waiting for an amazing business opportunity to come. Then he will break this fixed deposit and put the money there and make his business bigger. We are waiting for that news to come. And when that news comes, believe it or not, this 33 rupees stock will become 120, 130, 140. Couple of students are old students who are listening the class here. I am sure that in the previous batch they might have remember that I recommended a company called as Perfect Pack. That time the price was 140, 150. When I recommended, the price was 140, 150 a year back. Just like BN Rathi Securities example I have given you, I had given an example of this stock. The money got multiplied by 3-4 times. What is the story behind this stock? Perfect Pack, if you there's there's a long story, but just to brief you, if you go into the website itself, you can make out this company has got acres and acres of land in Faridabad, which he purchased long back for the factory, some decades back, I would say. First of all, this company is into eco-friendly packaging. 30 years back, he started a factory in Faridabad, which used to be outskirts of Delhi. That time, Faridabad was a jungle area. Today, it is like Noida, expanding pretty fast. It has come in the center of the city. Only the land value, forget, first of all, his business is solid. Forget his business, only the land value what he is holding is at least 10 times than the market cap. What it will do, already the government has issued the notice, please shift your factory, please shift your factory, it is creating pollution, please shift your factory. For an ordinary person, it is a bad news. Government is raising a complaint, giving a penalty, telling him to shift. there seems to be some problem in the company. That's how an ordinary person will see. I see this as an opportunity. What I think, if this guy is shifting the factory, then something he will do on this land. Either he will sell it or he will develop it, he'll make a township, he'll make a cricket ground, we don't know. But something he will do. And that is what is the news under circulation. That's why the price is rising exponentially. But we knew it in advance. That Faridabad land parcel, what he's holding, is giving us a conviction that buy as much as possible. Like that, I'll recommend you another company today, Elnet Technology. This is the company which is having a software park. It is having a software park in Chennai. Okay, this one. Huge software park. The price is very cheap compared to the value of the land what he's holding. So I'll also put down the recommendation so that we can track it. Maybe the next batch I'll have something to show. So if you want some safe kind of investment, then these are the companies who have got huge land bank. Elnet at 152, great buy. I would say safe also, great and safe buy. I had recommended in the land bank process only Apollo Hospitals is owned by Dynavision. I recommended that company at 60 rupees. Today it is 200 rupees. I think 1.5 year. But a very same like Elnet that time. It was Dynavision. So Apollo Hospital was his tenant. That building cost is minimum 100 crore and that company was available for 10 crore market cap. It's a screaming buy, jackpot. And when the real estate boom will come, the same stock you'll see at 450, 500, 600 also. I'm taking the present value should be at least 3 times. The present value of this stock should be minimum 500 according to the land bank that is having. And when the real estate boom comes, the value would shoot up like anything. So how much it falls, that much you have to buy. At 152 you will be buying. At 140 it will be even more better. At 130 even better. It will test your patience. But when it starts rising, you have already seen the graph of lot of companies that I've shown you. That time will also come here. So having the knowledge about the stock is very important. 90% of the people, they don't have knowledge. They are only seeing the names. Tata Motors, don't invest in Tata Motors, I'm saying. First of all, Tata Motors, only electric vehicle segment is doing well. That is not even 5% of his business. He is under a huge debt because of the failure models of Land Rover and the other one, premium car, Jaguar. He purchased that from the Chinese company and now he's struggling. Biggest mistake he did in his life. And people are just seeing the Nexon demand and they are buying Tata. Nexon is like nano for him at this stage. That is not even 5% of his business. And lot of other electric vehicles have come. And plus it is an holding company. I'll tell you what is the problem with holding company. So when you do not have knowledge, you are looking at a brand name and buying, you won't make extraordinary return. You are doing what the general public is doing. You have to do something different than that if you want to make different return. So knowledge, especially in stock market, in every stock that you are holding, is very, very important. Company releases a book every year. Every company that you are investing, they release a book every year called as annual report. That book will be of 70, 80 pages. You won't have the patience to read that. We read that book and we read previous 5-6 years book also of the same company to understand the growth path of the company, to understand what is that they are planning in the near future. There's another safe company that I'll tell you, Sovereign Diamonds. I'm having lot of shares of Sovereign Diamonds. I'll show you how many I have. At 16 rupees. Let first see how much confidence I'm having in this company. By that you will also get confidence. This company was under debt, but every year it is reducing its debt, and in next 2 years he says that he'll become debt free. Sovereign Diamond holds a building in Kalba Devi in Mumbai. That building value is said to be minimum 70 to 80 crores. I believe the market value is much higher, but let us assume 70 80 crores only. You are getting this company for less than 10 crores. Isn't it a jackpot? First of all, I'm not considering the core business, I'm only considering property value. And then when you see the core business, that is also solid and the company is going debt free and the jewelry sector is in boom right now. And technical analysis, fundamentally everywhere it fits well. So a safe buy and a purchase where you could multiply your money. See my holdings. Yesterday it was up 10%. How many shares am I holding? 90,538. So my conviction is like that in the company. Even this company is cap DVI, you'll see that very soon it would rise. I am having 10,000 quantity of it. But for now, focus on Sovereign Diamond. So yesterday itself it rose. But a good buy. So all these companies I am putting down here. So by end of the training and then maybe next batch, of course they may not rise in a short term like a week or month. But if you give 1, 2, 3 years of time, it will be an example for the other batches that I am taking. Kalba Devi is like Begum Bazaar there. You know what is the price of Begum Bazaar, right? And there he has got a commercial complex. So if he shuts down his business, it's a good news for me. Because he has to sell the property also. That is the rule of the market. If you are shutting down the business, sell everything what you have got and give it to the shareholders. Every company has to follow this rule, otherwise they'll be jailed. So if he continues the business, anyway the core business is doing good. And if he shuts down the business, then also it is good. Both way it looks like a win-win situation. And these are rare companies you will not find anyone recommending. And that is where you have to be. Buy the companies which is out of flavor, which public doesn't know, and sell it when the public knows. Time will come where everyone will be saying, Arey, Elnet company has got huge land bank in Chennai, everywhere in WhatsApp, Telegram, that messages will get circulated. Time has come, my friend, to get out of that stock. Choose another one. All my recommendations, if you forward it to others, they'll say, sir, I'm not able to find this company. What is the code? Sir, I'm not able to get the shares. Sir, what is this company? Never we have heard. Like that kind of replies I get, personal replies. I don't even reply them because I can't keep explaining for every stock. You have to go into Google and find out through annual report what is the core business of the company and all that. I'll only tell you majorly 2 3 points. But if you are already trained under me, you know all the points. You scan the company, you'll say that yes sir, these are all the points what you discussed in the training and it is matching with the company. It looks amazing. Alright. So getting back to the stock market. So yesterday we had started our discussion and understood why we have got two exchanges. It is all because we never had NSE. NSE had come later during the Manmohan Singh reign when he was a finance minister, not prime minister. And this was needed to bring in the foreign investors. Only when the foreign money comes into India, the companies can grow pretty fast, the exchange can grow pretty fast, and there will be ample liquidity. For that purpose only it had come. You know, in America there is real estate exchange also. You want to buy and sell a property, you can do it online itself. The problem in India is that we have to wait for a buyer to come. That's why buyer price will be 1 crore, seller price will be 1.5 crore. That much difference you will find. But in America it will be like 1.45 crore buyer, 1.5 crore seller. Click of a button, the business goes. You believe it or not, in Australia, because my friend says there, he says that property, multi-crore properties are exchanged just with an email. Zero paperwork, only an email. Your proof that you are the owner of the property is that email. And where we are still working on Dharani portal. So we still have a long way to go, whether it is technology wise or development wise. Like if you go to Dubai, you go to say Hong Kong and all that, you will see that India has not grown even 1%. So if India has to grow, India has to become superpower, then definitely our exchanges will get multiplied. Let us understand the market cap. What is market cap? I am going to discuss on this market cap again. But for now, remember market cap is nothing but if you buy everything available, what is the value that you have to spend as of today's price? Like you want to own all the companies which are there in our exchange, all 100% shares of that company, then what price you have to pay? For NSE, the market cap is approximately 250 lakh crore. If you have 250 lakh crore, then 7,000 companies become your private company, which includes your Ambani, Adani, SBI, SDFC, ICICI, TCS, Infosys, that Sovereign, Diamond, Elnet, everything becomes yours if you have this much of money as of today's market price. Alright, that is what is called as a market cap. There is no separate market cap for BSE because I told you companies are common. So consider NSE only, or NSE BSE together 250 lakh crore is what we have. Now let us understand how big or small is our market. For that you need a comparison, right? Let us compare with the biggest, the mother market, the biggest of the biggest market, which is your American Stock Exchange. We have got 3 exchanges in America: Nasdaq, Dow Jones, S&P. We have 2 here because of the issue with the state government and the central government. But here we have 3, not because of any geopolitical reasons, but because of the economy is so big. America's economy is so big that a single index doesn't fit all. Majority of the business in America is IT. So only IT companies will be listed in Nasdaq. Only IT companies like Google, Amazon, Facebook, all the IT companies. Here Cisco, and here in Dow Jones you have got all the industrials like say Michelin tires, or you have got Nike shoes, Fila shoes, all the financials, banks, Wells Fargo Bank and all that. Your Visa, biggest of the biggest banks in America, everything is available in Dow Jones. And in S&P, Standard and Poor, that's a full form, consumer based companies like automobiles, Walmart, then your Colgate Palmolive, pharma companies. Like that, they have got 3 exchanges. Ours is 250 lakh crore. Let us see how much is theirs. If you type it in Google, you'll get an idea. Only Google is 160 lakh crore. Now imagine. Google is 160 lakh crore, Tesla is 100 lakh crore. These 2 companies fits our Indian stock exchange. Now you know where we stand. Now you know how much long we have still to go. Google is 160 lakh crore company. Can you believe it? It started in the year 1990. Now tell me. 1995, sorry. So Nasdaq index market cap is $28.28 billion. Let's take 28 roughly, okay? How much is 1 billion? 100 crores is 1 billion. So how much it is? 28 100 28 100 crores, okay, and then into Okay, this is Nasdaq Inc. This is not Nasdaq Index. Sorry, that is into trillion dollars. There's a company itself called as Nasdaq. Just like we have NSE stock exchange, we have got NSE share price also. BSE. Okay, so BSE itself is a listed company, and BSE is an exchange also, Bombay Stock Exchange. Not showing value anywhere. It is all into trillion dollars in it. And how much is 1 trillion? 100 lakh crore is 1 trillion. See here, within Dow Jones, you have got Apple, you have got Microsoft, you have got United Health with these valuation. Okay, so Apple, if you see, 2.3 trillion dollars. Look at the share price of Apple, 1,43,000 dollars. That means 1 crore you require to buy one share of Apple. And look at this one, 235, 520. But there in America, just like Bitcoin, you can buy in fraction also, 0.01 share, 0.02 shares like that. Okay, here. Market cap of Dow Jones is $10.35 trillion. So $10.35 trillion means 10.35 into 83. Yesterday dollar crossed 83. 859 lakh crore. Approximately you can say 860 lakh crore. This is almost like Nasdaq is almost 1.3 times of this. So some 1200 lakh crore. I'm giving you the approximate values, and S&P is the biggest one. So 2000, 3000, roughly 4000 lakh crore, and we are 250 lakh crore. That means American market is 16 times bigger than India. On an average, the wealth in America, even with just 50 crore population, we having nearly 160 crore population. So population wise, we are 4 times of that, but economy wise, they are 4 times than us. Sorry, 16 times than us. So that is why if the problem was in America, when the recession had came in America, the ripple effect was there to the globe. America holds 40% of the world's economy, the world's stock exchange value, 40%. In fact, even in India, in this 250 lakh crore, 50 lakh crore is of foreigners. Our own domestic wealth is only 200 lakh crore. So we are, I feel bad to say, but we are nowhere compared to America. But yes, I am confident, I am pretty optimistic and ambitious that sooner India will give a fight to America. maybe next 20, 30, 40 years, whenever so. But today the ground reality is that we are nowhere. We are not even 10% of what America is. So imagine that if India has to grow, we have to at least become 50% of what America is. We are going to become third largest economy for sure. China is almost 50% of America. Nearly 2000 crore is the wealth of China, four times than India. So the gap is very big. We are right now fifth largest. We were seventh largest a year back. We have become fifth largest now. Sooner we will beat all the European countries as well as Japan. I'm expecting that to happen in next 2 years itself. And we'll come to third spot comfortably, but from there, maybe it can take decades and decades. But even if we reach third spot, our markets will grow like anything. And selected companies that you have chosen, which are fundamentally strong, even more higher. We are going to outperform the index by a very good margin. We are going to outperform the mutual fund, whether SIP or lump sum, by a very good margin. That much at least you can expect through the recommendations. That's all, sir, for today. So it's already time. The market is about to start. I may get some calls. So any doubts, questions you have got, you can now use the audio control or the chat window. Tomorrow we'll continue, same time, same link.
Sure.
Yes,
Sir,
please.
any work? I mean, homework